Here's what's coming up on today's show.
That is free money on the table. So make sure that you are at least contributing to the match.
Welcome to the How Money Works podcast with Craig and Jennifer Moser of Maestro Wealth Advisors, serving you throughout the Triad of North Carolina for more than 30 years.
All right, so the New Year's checklist, let's talk about it a little bit.
Yeah.
Tax withholdings. So we're in the big first part of the year, right? So if you're a pre-retiree, in this example, I suppose, right? Because retirees don't have to worry about this as much. Pre-retirees, do you have the right amount of money withheld from the paychecks? Do you need to make some changes? This is that time of the year where you may want to consider that.
You do, and really probably the best time to look at it is when you paid your April 15th taxes, right? Did you get a huge refund, or did you have to cough up some jack
right.
to the IRS in North Carolina or Virginia if you're a Virginia listener? But now's the time. Look at that and see if you're withholding the right amount. I mean, the taxes are very low right now. We've got basically 2 more years of low taxes. Look to see that you're not paying too much, because if you do pay too much, the IRS is holding that interest-free for you. So you might want to tone that down. And for those who
and that's no fun, right? They get to hold it interest-free, but if we owe them, they hit us with interest.
Well, not only that, if you're not paying enough, so you also need to look at if you are taking money out of a qualified account, an IRA, and it becomes taxable at the time you do that. If you haven't made the proper quarterly contributions or quarterly estimates to the IRS, you can get penalized. So even though at the end of the year you might have a refund coming, but if you haven't paid the proper amount along the way, you're going to get hit with a penalty. Okay. Another thing you want to think about is your retirement account contributions. So if you are still working, the plans change sometimes. Sometimes the employer might, add a Roth contribution. They might change their matching formula, that kind of thing. Do a deep dive. Look at your plan to see what the match is.
Because the numbers went up this year too, right? Now that we're into 24.
Well, the maximum contribution amounts have gone up. Yes, not necessarily the match that a company's going to give you.
But if you want to pump in more this year than you did last year, you could look at that as well.
Right. And especially if you have it set for a fixed amount, you might want it to increase that. If you have just turned 50, you might want to do the catch-up contribution as well. But we're bouncing around a little bit there, Mark. So make sure that you're at least getting the match on that contribution. Safe harbor, you might have a dollar for dollar for the first 4%. You might have a dollar for dollar match for the first 3%, and then 50% on the next 2. So you've got to contribute 6, and your employer will do 5. That is free money on the table. So make sure that you are at least contributing to the match. The other thing you want to think about, is that really going to be enough? If you do contribute and then the match occurs, is that, let's say, 8% of your salary, if you got a 4%, dollar for dollar, is that going to be enough for you to retire? Well, a lot of people say, I don't know. And the reason why they say I don't know is because they haven't run the numbers. They haven't gone to a financial professional to actually run those numbers to say, how much do I really need to be contributing year after year with a reasonable amount of return, and how I'm invested in order to be able to retire comfortably. And so that's one thing you want to think about. Do I need to go ahead and get that baseline now to see where we are? Especially if you're 5 to 10 years from retirement, you can make small adjustments to that number that you've got to contribute, and it compounds, versus waiting to 2 months before you're ready to retire and you've got to come up with a shortfall somewhere. So look at that retirement account contribution. Look at it from the matching, and also look at it from you may be older and subject to catch-up contributions, and the maximum amount, as Mark had said, as you said, has increased. So you can actually contribute more legally to your own retirement.
What about gathering our tax info? So since it is January, we probably should start thinking about, yes, the tax prep is the stuff we do for the April thing, right? Of course, tax planning all throughout the year is something you guys do as well, and that's very important. But this is that time of year where people start thinking about, well, I got to pull all this junk together.
They do. And it makes sense to have a folder and just start printing things and putting it off. And I would actually, I'm a big checklist person anyway. I would, where are your accounts, and wherever your investment accounts are, IRAs, Roths, individual accounts, your savings, checking, whatever, you're probably going to get some kind of a statement from that institution. have a checklist. Did it come in? Check, 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 check. And then you know when you have all of your documents. I will say, so the time where all tax documents are distributed and received by shareholders by January 31st is long gone. We say that you're going to get those statements at the end of January. Most likely, most do. But the problem is the government has allowed the mutual fund companies that have K-1s and produce K-1s for those investors, they've allowed them to not have a deadline as strict as the January 31st deadline. Oh. So your custodian, your Fidelities, your Wells Fargos, your Merrill Lynch's, whatever, they're at the beck and call. They can't report information unless they've been reported to by these mutual fund companies. So sometimes it's into March before you get that information, especially if you have a K-1, a limited partnership investment. Those K-1s really are coming out later and later. So don't be mad at your financial advisor if you don't have it by January 31st. Again, we're at the beck and call of whenever the custodian, our back office, gets that information from the underlying investment firm. So
that's good to know.
Just to let you know.
Yeah.
Yep.
All right. Overall retirement health. Good time to assess it, right? I mean, so if we're into the first quarter, if you're thinking about getting a plan or you have a plan, but you want to make sure that you're, on the right path, make some tweaks, whatever that looks like. I mean, January is a great month. I mean, this is already the second weekend that you and I are talking here, Jennifer. So it's not going to be long, right, before it's February and so on and so forth. So get a plan together and, get started.
We've been in this industry for 30 plus years, Craig and I, and this is the time where people are looking around. They're looking at their information that they had and what they did, last year, and they're saying, I want to see if I'm on the right track. And if you want that second opinion, this is the time that you're probably going to be shopping around for it and making those phone calls. We would definitely feel honored if you included us on that second opinion shortlist and you gave us a call to see what we would recommend for you to make sure that you are going to have a successful retirement or as successful as you can. We look at not only just your finances, but we also look at your estate planning. We look at your risk, your insurance. Are you spending too much, not enough in that side? We work with business owners as they are business owners, poor guys and gals. They not only have their own personal information they have to deal with, but they're also having their business.
Correct.
And so a lot of times their personal information kind of falls to the wayside because they're so focused on their business and their employees and making sure that their customers and clients are, services are exceeded expectations. So don't let your own personal affairs, go by
the wayside.
On the wayside. Yeah, exactly right. So when we come...
I was just going to say, some of the questions that people think about at this time, right, Jennifer, usually annually is, am I taking too much risk, right? Or can I be more tax efficient? You were just talking about taxes, right? So those are the questions that tend to pop up.
And typically it's not, am I taking too much risk with the market the way it's been with up and down? It's more of, I need to get more.
Okay.
And if I get more, greed is a very strong human
emotion,
right?
Just a little bit.
It is.
Yeah.
It is. So they're wrong. I need more. But the question is, do you really need more? And if you take more, is that a calculated risk or not? And the only way to do that and know that is to actually run those numbers. And that's why we have complimentary consultation with our clients or prospective clients. You're going to come in, we're going to sit down and talk, get an idea of what you want, where you are now, and then we're going to put together, what we think if you stay in your present course based on all our analytic tools, where's that going to take you? Is that going to be where you need to be? And then if you say, I think I'm coming up a little short, and we both agree with that, then we're going to go back to the drawing board and say, okay, what can we do better for you? How would we change some things? How would we realign your investments? How would we realign your accounts? Maybe making sure that you don't have gaps. Maybe you don't have an emergency fund. Maybe you haven't done it's amazing how many people haven't even done their wills and their estate planning. It's not hard stuff, but you need to go through the steps to make sure you've covered everything that needs to be covered.
Thank you so much for checking out the podcast today. If you have any questions about what we've discussed, remember, you can get a complimentary financial review with the team at Maestro Wealth Advisors by calling 336-448-1086 or go online to howmoneyworksradio.com for other great resources and ways to reach the team. You can also check the show notes of today's episode for our contact information as well. And don't forget to subscribe to the podcast on your favorite app so you never miss an episode. We're on Apple Podcasts, Spotify, Google Podcasts, and all the most popular apps. For Craig and Jennifer Moser, I'm Mark Killian. We'll talk to you next time on the How Money Works podcast.
Craig Moser is a financial advisor and certified financial planner. Securities offered through Avantax Investment Services, member FINRA SIPC. Investment advisory services offered through Avantax Advisory Services. Insurance services offered through Avantax Affiliated Insurance Agency.